Hello and welcome to Sovereign Financials, financial education for everyone.
Hi guys, welcome back to Sovereign Financials. Today, you've probably noticed the stock market's taking quite a dip, and other things like gold and silver, and also Bitcoin and other cryptocurrencies are greatly up. We're going to talk about today China, we're talking about the US, we're talking about trade wars, currency wars, and kind of give you an overall view of what's going on so that you understand what's going on, and we can kind of decide how we need to invest or position ourselves best for the future. All right, so first let's go back to Thursday. And on Thursday, Trump announced there'd be an extra 10% tariffs on another $300 billion of goods imported from China, right? The problem with this is that if you add tariffs to China, so it's harder for China to get US goods into the US because they're more expensive, how does China combat that so that they can kind of have their own ability to still sell stuff to the US? And unfortunately, one of the best ways of doing that for China as a country is to devalue their currency. Now, what does devaluing their currency mean? To devalue your currency means to make your currency worth less. And why you would want to do that, or people might think you would want to do that, is due to Keynesian economics. The current schools of thoughts of Keynesian economics says that the less your dollar or less your Chinese yuan is worth, less the currency is worth in your country, the cheaper it is for other countries to buy goods from you, and therefore you will increase your exports and your economy will do better. Now, whether that's true or not is totally a different story, especially for an Austrian economist that doesn't really fly. However, China believes that by making their money worth less, they will be able to sell more things to the U.S. regardless of the tariffs. So if you notice, China here has very tight control over their exchange rate. So, they keep it at 1 US dollar, buying somewhere between 6.8 and 6.9 Chinese yuan. And then in retaliation, just this morning, which is technically in the middle of the night for people in the US, China decided to devalue their yuan to make it worth less so they can still import stuff into the US. So they took their yuan from 6.8 and they broke this 7.0 marker. So now for 1 US dollar, you get 7.045 Chinese yuan or renminbi. Now, that doesn't sound like a big move, but the 7.0 number was kind of this line in the sand where people thought, like, well, China might devalue their money a little bit, but they're not going to go less than 7.0 because they haven't done that in years and years and years. And that would then signal potentially a currency war with the US. What happens in a currency war is that two countries or more are in a race to the bottom. They continually want to devalue their currencies so that they can export their stuff to other countries easier. Now that's potentially good for a country to be able to have lots of exports and lots of economic activity, but that's terrible for the people in that country that use that money. If you're in China and you use the yuan on a daily basis and you saved up, let's say 100,000 yuan, and they just made your all your money worth 20% less or 10% less, whatever the number might be, right? That ends up significantly decreasing your purchasing power. And sure, this little move today was only 1% move, but they just devalued the entire currency by 1% or 1.5% in a single day, which is a huge number. And then it can also mean that they can keep devaluing it, and then anything that you own within that currency, like if you live in China and you have investments or you have savings accounts or bonds and all that stuff, it makes it worth less. Now, if the U.S. also participates in this currency war, and then we start devaluing our money, then the money that we have in savings, the money that we have in investments, that also becomes worth less. So the only people that win in a currency war might be the country itself, but individual savers and investors totally get screwed if that happens. All right, so China devalued their currency. They made it worth less. They're like, hey Trump, we're gonna get around your tariffs by making our money worth less, and therefore it's easier for us to sell our goods in your country. Now, Trump tweeted this morning, China dropped the price of their currency to an almost historic low. It's called currency manipulation. And you know what? I mean, yeah, like it is manipulating the currency, right? But the U.S. does it too. We change federal interest rates all the time. We have quantitative easing. We have quantitative tightening. It's not like China is the only country in the world doing this, okay? And then it says, "Are you listening, Federal Reserve?" Now, why does he make that statement? He's making that statement because he wants the Federal Reserve to start with this currency war with China, right? He says, "Look, China, I'm putting these tariffs on China. I'm trying to make it harder for them to sell us goods. And now they're retaliating by making their money worth less. Hey, Federal Reserve, make our money worth less. Decrease the interest rates. Start quantitative easing again. Like start printing more money and make the U.S. dollar worth less so that we can compete with them. Right? He's not flat out saying here like, hey, Federal Reserve, make the U.S. dollar worth less, because that would not be very good for a president to say. Like people would not like that. But people are not going to understand, like, are you listening, Federal Reserve, understanding that he's telling the Federal Reserve to drop the interest rates more, to potentially start quantitative easing, and to make the U.S. dollar worth less, right? And then he says this is a major violation which will greatly weaken China over time. Who knows? Who knows if it'll help China or end up hurting them in the end? And then a news reporter in China, and this is also verified through some other means, that China has decided to suspend tariff exemption for U.S. farm goods, and Chinese enterprises have halted buying U.S. farm products. So China says, hey, not only are we going to devalue our currency, but U.S., we're no longer going to import any of your farm products, right? Like any of the fruits or corn or anything else that we export to them from farm products, we're not taking that anymore, right? That is not good news, right? This is kind of escalating a little quickly here. Now, you might have heard on the news or saw it on your stock portfolio app that the S&P 500, right? We're only like midday right now, and the S&P 500 is already down 2.65%. So just kind of dropped off a little cliff there, down 2.6% in a single day, which is pretty rare. Same thing, Dow Jones Industrial Average just kind of took a dump off a cliff, down 2.7% right now. And then same with the NASDAQ Composite is down 3% right now, right? Single day due to all this news. You're like, okay, well, that's very unfortunate. Like, what could I have done to prevent this or to protect myself? And I really think that's where the sovereignfinancials.com newsletter comes in handy, right? We've talked about this in multiple newsletters. We've talked about the escalating geopolitical risk and steps that you can take to protect yourselves from this. Not only limiting your exposure to some of the stocks that don't make any money, that don't have basically any net income, something that's highly speculative. But also we talked about having an appropriate hedge, and probably more than just the 5% hedge that people used to have. Now you might be asking, well, hey, what's a hedge, right? And people don't talk about hedges anymore. But back in the day, and this should still be a normal part of your portfolio, but 5% of your portfolio was a hedge, meaning that if stuff goes bad in the economy, right, this 5% of whatever else it is should do good. So you find things in the economy that do well in a bad economy, and that kind of helps balance your portfolio and protects you from some losses. Now, if you look at the geopolitical risk that's been increasing, and you look at gold has just been on this nice uptrend. And then obviously we have all this extra geopolitical risk, with China and the U.S., the trade and currency wars, and then gold is going up pretty significantly. So gold's doing pretty well. Now, I'm not quite as big a fan of silver as I am gold, because gold is a better store of value for some other reasons, specifically like something called a stock-to-flow ratio, and basically silver can be mined a little quicker than gold can, and so can the total amount of silver being mined per day, which makes it a little bit of a less good as a use of money. But with that aside, right, silver has also been doing really well, and silver took a little uptick today as well. And then here at Sovereign Financials, we're big on cryptocurrencies. Just ones that we believe will actually, be there in the future. And if you've noticed, cryptocurrencies have just been doing really well recently. And actually, if you look at last night, right around, basically in the middle of the night, like 11 p.m., somewhere between 11 p.m. and then 1 a.m. this morning, right when the news came out that China devalued their currency, Bitcoin rose up by 6%, like immediately, just a snap of a finger. And it's still up 8% today. And we have significant increase over the past couple months, and I really think that Bitcoin's going to keep going up. I think too that not only if you're in China, and if China's saying like, hey, like we're going to make our money worth less, we're going to devalue the yuan, right, so that we can compete with America, but all the individual people that are saving their money in China and all the investors in China, they're losing money. If you devalue their money, right, they now have less money to spend. They have less purchasing power. And I think part of this is a flight to cryptocurrency. Like, well, if you're going to make the yuan worth less, then I'm going to buy some Bitcoin, where at least it's not controlled by some politician, right? And in the long term, Bitcoin has gone up. And then you have other people in the world too that are like, man, there's this escalating currency wars. Most likely the result of that is the yuan gets devalued, US comes in, also devalues the US dollar, and they kind of go back and forth. And then if you have US dollars or you have Chinese yuan, or also called the renminbi, if you have those and they're racing to the bottom, right? You need to find something else to protect your money in other than US dollars and other than Chinese yuan, because those are going down, and you got to find something that's going to at least maintain stability, if not improve from those circumstances. If you need a book to read, there's something called Currency Wars by Jim Rickards. It's a great book. If you haven't read it, I highly recommend reading it. Also, I recommend you subscribe to the Sovereign Financials newsletter. We've been talking about this for a while. Our readers are prepared for this. You could be prepared for this as well. I really, seriously, highly appreciate it if you guys can come down here and hit that like button and subscribe. Share the video with your friends that may not understand what's going on with the Chinese and US currency wars and trade wars, and also how they could benefit from it, right? How they could invest in some things to actually protect themselves, if not actually do better in these circumstances. Thanks so much, guys, for coming in today. Appreciate you checking out the video. I'll see you guys next week. Bye.